Morning traders. So just having a look at the Dow, and again I've got the weekly chart up. There's method to my madness here because we have another range bar. So if you have a look at last week's candle that was printed, it's essentially a spinning top, or alternatively what I refer to as a range bar, and I'm looking for a break of this range bar on the daily in order to confirm some long-term trades. And long-term for me will be 2 to 3 days, okay? So you can see we have the range bar here, and there's nothing really else on the weekly that's indicating extremely bullish. We've had a bearish crossover of Kijinsen and Tikinsen, but remember what I've said, the Ichimoku is an indicator and it is lagging. It's built on moving averages and calculations of moving averages, so it will be a lagging indicator. So let's just look at the price action on the daily. So first thing you'll notice is the 200 EMA is kind of flat, but it has held up price, okay? And we've had an engulfing candle, we've had an inside bar, and we've had a pin bar here. So the other thing that you'll notice is when Kijinsen and Tikinsen, blue line and the red line, are flat like this, and the cloud is flat, it indicates that we are ranging. Now you can see how price has been bouncing between these in a pretty well-defined mini range within this weekly range bar candle. Okay, so the daily, there's nothing really to write home about. We're looking for a break above Kijinsen, the red line here, which will also be the 100 EMA, for a push to try and get through last week's high, and then if it will push above that, will give us an attack at the cloud. But right now, let's rather drill down to the 4 hour so we can see what's going on here. Okay, so you'll see here how these two bars here bounced right off the 50% Fibonacci of the weekly range bar. Okay, and you'll notice that with ranges quite often, price, once a range is formed, price will always come back to the 50% or the 61.8% of that range before bouncing to the upside. So from the 4 hour perspective, we are above the cloud. We are above Tikinsen and Kijinsen, and Tikinsen is above Kijinsen, which is bullish. The only negative part we have here is that sequence band has come back into price. We'll need this thing to point up above price. Cloud is green, which is bullish. So from a 4 hour perspective, we are pretty bullish. Okay, bit of divergence here, so price is heading down, and the indicator is pointing at the top. But again, diversion can carry on for a long time. So I'm more interested in diversions at major levels more than anything else, and we don't really have a major level here. And this pin bar here, we're looking to be challenged, and it's been challenged there, it was broken, and it's been challenged again yesterday. Right, so a break above that will definitely give us some direction. Let's just get this trend line in as well. And I'm just going to tighten it up so we've got 1, 2, 3. And the reason I'm doing that is because I can see that we have a channel there. Copy that, and more than likely we'll have some kind of resistance here as well. You can see how price is interacting with this trend line. Okay. Also take note of the 200 EMA, which is offering some resistance. So what are we looking for? I'm definitely looking for longs on the Dow, bearing in mind that earnings season is upon us, and the tax cuts that came through in Christmas are definitely going to add to profits. So I'm looking for longs on the US markets, and I think the question is, where do we get in? We want a relatively cheap price to get in. So on the 4 hour, the 100 EMA is definitely held up price. So a couple of areas that I'd be looking for is kind of there. Okay, so Dickinson and Keeganson obviously, and then the bottom of these pin bars. And we also have the cloud here, and then we have the bottom of the channel. So this is definitely an area that I'll be looking for longs. And you've got 110, 120 pip stop, which is for me well within my 3% rule. So this is definitely an area that I'll be looking for longs. Let's just get to the hour. Maybe we see something different there. Well, what we do see is the bottom of the cloud, the top of the cloud, sorry, here, because it lines up with the block I drew and also lines up with the 1 hour channel line. So that's definitely something that I'll be looking at. And I think lastly, let's just look at the Fibonacci extension of this area. So the 50% is right in the middle of this block, and the 61.8 is pretty much the cloud and the bottom. So, yeah, so I'm comfortable with that. So definitely be looking for any kind of bullish action on the hour inside this block. If I get that, I will definitely be long and looking for a break of, let's get to the 4 hour so we can just see what we're doing. I'm definitely looking for a break of this weekly bar. If we do get the break, then it'll be a case of holding that trade, and I'll be holding it for pretty much the top there. And we also have a breakout test up here. Let's just copy that to the bottom of this pin bar here. So this area would definitely be an area where profit taking will happen. And look at that, it lines up with the range height on the weekly. So that would be my target area, somewhere inside here. Which is quite substantial. So yeah, so if we, let's just say we get in here. Okay, so the correct way would be to have your stop loss here, which is a 280 pip stop loss, which will be below the cloud and also below the previous swing low. So that's probably the correct place to do it. So whatever entry you put in, make sure that it's small enough that will cover that. Okay. If it breaks the top here, then you can slowly move that stop up until you stop to entry, and then look for the next entry, and then look for the next entry until you hit that target. Now that is a 1,700 point move on the Dow, so I think it's well worth the risk right now. So very small entry with a 280 pip stop loss, and you're looking to hold it provided we break this range level. Okay. So, yep, that's my play for the Dow. Looking good in my view. Anyway, I hope it helps, guys. Catch you later.